Let's talk about the timing of this announcement. Why now from Ms. Lagarde?
That's a good question. I think perhaps to deflect a little bit of tension on the market if the Greece situation goes somewhat awry. If that does happen, we think that's going to be a pretty major risk-off event, so that's part of it. But look, everybody's got an opinion on the Fed. Christine Lagarde does, I do, you do, so it's pretty common for people to talk about it. We still think the Fed's going to go in September of this year, but again, it is data dependent. The Fed can't very well say it's data independent, so it's going to look at developments over the next few months, but I do think it's probably tied a little bit to Greece anyway. That's why the IMF piped up when it did.
But Lisa, explain to us, though, I mean, this is not the first time we've heard an IMF head weigh in on central bank policy. Is that right?
Well, I mean, they've talked about central bank policies for every other central bank, or most other central banks, including the ECB, before, but the U.S. has been somewhat immune until now. That said, the IMF has been raising some serious concerns about financial stability in the U.S., particularly in the U.S. bond markets, and has been doing so pretty steadily. So, you know, this is sort of building on that and raising financial stability concerns to the front of people's minds.
Mike, part of the statement said the FOMC should remain data dependent and defer its first increase in policy rates until there are greater signs of wage or price inflation than are currently evident. We have been getting a sense because Fed Chair Yellen had been saying that one of her concerns was that wages were stagnant, but the FOMC is data dependent. What are they reading in the tea leaves that the IMF is not?
Yeah, the job market's been pretty strong in the U.S., right? It's cranking out 200,000 jobs plus or minus per month. At that rate, unemployment drops, and you'd have to think, if economics still holds, wages will pick up. So I think the Fed's looking to get a little bit in front of an increase, whereas the IMF wants to lag a bit. So to me, that's the big difference in those two views.
Mike, do you agree with Christine Lagarde that there's a bigger threat that the Fed will hike too soon rather than waiting too long?
No, I don't. I think the Fed has already waited a long time. You think about the Fed's dots, right, and look at unemployment. It's effectively at the Fed's long-term target. And you think about inflation, yeah, it's a little bit low, but it's not terrible. If it ticks up a little bit, it's going to be in line with the long-term dot. And yet Fed funds is bumping along at zero. So it seems to us the Fed has already waited a very long time. Yes, the markets probably get hit a little bit when the Fed hikes, but geez, if we can't withstand a 25 basis point increase, I think we all have big problems.
That's true. But come on, I mean, look, Christine Lagarde just set the world on a bigger. If we weren't already watching the Fed, we are watching them even more. And you know, I hear what you're saying, Mike, that you know likely they'll still go in September. That this doesn't really change very much. But she just made it a whole lot harder for Janet Yellen, didn't she?
I don't think so. Honestly, when you think about what the Fed cares about, the Fed will give lip service to international developments. In fact, it put that phrase in the statement a couple months ago, but it doesn't care that much. The Fed cares about the real economy in the U.S. The Fed cares about the financial markets. Yes, if something really goes badly overseas, the Fed will pay attention. Certainly it did in 1998. 2008, you could argue, was a huge global meltdown. But nonetheless, the Fed is really U.S.-focused front and center. So I think by the IMF speaking up, it didn't really make it that much more difficult for the Fed. What I do think it made people look at is say, well, why is the IMF talking about the U.S. now? It's never really focused on the Fed very much. This is kind of unusual, but I don't think it's put that much more pressure on the Fed.